Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock p.m. in New York on Monday, last day of the month, last day of the quarter, March 31st, 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets with platinum and palladium trading higher and gold and silver still under pressure. Gold being under more dramatic pressure than silver, off about 0.75%. You can see it has broken through support areas, the 50% retracement level, which was roughly at 1287, 1288. Market is currently trading roughly at 1283 with a low of 82.30 and a high of 1299. Puts it off roughly $9 to $10 on the day, and it is currently trading near the lows. We'll talk about support levels through the show. Silver also continues to drift lower, but the down market today is only off about 5 cents on the day, or 0.25% lower. 1974 current print on our screen, 1966 on the low, 2010 on the high. More on silver towards the end of the show. You know, traders, if you recall on Friday, we talked about the potential of some sort of bottom activity in gold as we saw it kind of resting on a level that we thought might provide some sort of support. Now, that level was the 50% retracement. This is the longer of the two retracements, covering the entire span of this most recent rally, which is 1181 up to roughly 1391. It's a $200 move. Comes back down 50%, takes us to 1288. The next really strong level of support, we've got two of them. The primary one has got to be around 1262 to 1265. We do have a minor one at 1273, and the minor one is a 76% retracement of this shorter rally. And the reason we divide it up is, as you can see, the market does come up through a period of peaks and valleys, so to speak, but when it hits this high, it comes back down to this 76% level right in here. You can see that there's some real good support in this marketplace right at this level. At least there was when the marketplace was coming up, and that provided kind of a springboard to propel the market higher. So we do have two different ones, but this, of course, the smaller of the two, meaning just this range right in here, is absolutely a minor level when we compare it to what we consider the primary fib retracement. And the primary fib retracement, of course, has got to span this entire rally itself. Putting it into that light, we are definitively below there. And as I said, we have 1273, but the real primary area that we'll begin to look is got to be somewhere around 1265. Now, at any point, we can see the market begin to bottom, but we'll get signs of that. And we talked a little bit on Friday about the different signs that we are going to look for, and those signs are primarily going to be based on candlestick patterns, 1, and 2, based upon Japanese average charts. Now, the Japanese average charts are always going to lag behind, but they're going to give us some indication of the waning or strengthening of a trend, and that is going to give us some sort of insight into the market's future moves. Traders, we are looking at our daily chart, and on our daily chart, of course, we have that same fib retracement. We just have our major one, which covers the entire span. I think that that's what's important. The other thing that we want to look at is a couple of different tops in the area, and these tops, although they're not Fibonacci based, are going to give us other potential areas to look at for insight within the market. You can see this top right here. We also have this high right here. Let me kind of put that through. And so as this market drifts lower, we have, of course, our primary area that we want to look at, which is about 1262, but we do have a couple of minor tops that we want to see if the market finds any support. Should the market continue to drift lower, which I believe is possible, and it at some point is going to find some sort of support in the market, my belief is that it will be between the area that we're currently at, call it 1280, 1283, to about 1265, 1262. And I think that this is the area that's going to provide us with base support if we don't find it prior. But to me, this is a pretty critical line in the sand, because anything past that 61% really starts to get near levels that negate the current model that we're working with. Because if we really get a strong sell-off, then it beckons the question, are we really in a bull market move, or are we just simply witnessing a counter trend? And the evidence is not clear on either side of the fence. It kind of oscillates back and forth. For example, as it went through the channel, it told us we might be breaking out, but then when it went back into the channel, it told us that we could definitely still be in a counter trend. And let me show you what I mean. So we're looking at our daily chart that we have our Andrews pitchfork in, and we talked about the fact that we have these outside prongs, and the market had been genuinely tracking within these parameters, meaning on the low side would be this 100% right here. On the high side, of course, is 0%. You go 23, 38, 50, 61, 76. Now, when the market broke, it actually broke above this particular channel line, but ever so slightly, because really all it did was go to the upper levels of these prongs and now is falling down. So the real question that remains is we are slowly headed towards this particular mark, the low end of this channel line 23. A breakthrough 23 would take it much lower to the 38%. And of course, this is very time sensitive. So let's go ahead and see if we just can't see where that is kind of focused on by going ahead and blowing this up a little bit and then moving it over. So as you can see, it is cascading so that we can see how far we really are. We are rather close, and I would venture to say, and let's find out exactly, but I would venture to say that the bottom of this line is probably going to put us at 79, probably going to put us down at around 70. Right there, depending on how long it takes, because as you can see, depending on the time necessary to get there, it's going to continue to cascade lower. And here's where it hits about 65, and that, of course, would be a future mark in the market itself. And so if the market were to drift a little bit lower and to the bottom of this channel line, what that tells us is it's looking at around the numbers at around 75 on this particular cascading channel line. So the second thing I want to look at with our daily chart, of course, is the Japanese average charts. That's what we're looking at right now. Through the eyes of the Japanese average charts, we cannot say that this trend has begun diminishing. You can see the absence of these upper wicks except for this particular candle here. But on all of these days down, you have this what's called a flat top, and this flat top is simply telling you that on each day it opened below the midpoint of the prior candle or the prior day. The bottom tails we don't really look at except on the way up. So for example, on this particular rally, as you can see, there's the absence of the tails. As the market moves sideways, you get those tails again. Till we really see any kind of tails in there, we're not seeing any weakening whatsoever. Now, does this in any way really change our overall outlook, and have we done any major chart damage? And to do that, let's go ahead and pull up our weekly chart. And I've gone ahead and done just that. I've moved up into our weekly chart, and really all I can say is when we consider the most recent rally and our move down, I'm still okay saying that we haven't inflicted any major damage as long as we maintain above a 1265 in terms of the conclusion of this wave. Absolute bottom would have to be 1235. Any move below a 76% retracement, and we are not looking at any kind of a normal impulse wave. The retracement would be just too great to consider that to be a normal retracement. So what's our strategy? And to really look at our current strategy, we want to look at the big picture, so to speak. Market comes down, and I do believe at this point that's a conclusion of a major fourth. And this entire move, of course, would be our major fourth. I'm breaking it up really into an A, a B, and then our C. We now head into a major fifth impulse. That's going to be combined of a number of different waves. Here on the subcount, we have our wave one that's in line. In terms of the length that it moved, the $200, wave one is always going to be a benchmark. So there's really nothing that can clue us in except if we compare it to a last wave one move. Now we're looking at our wave two, and our wave two at this point is still falling into alignment, as I said, as long as it maintains above 1265. So what I would look to see in this market, and price point is something we haven't been able to determine, is something like a 1, a 2, and then I would expect a third to follow it. And the third, the way that we'll know we're in a third, of course, is going to be at the point it breaks above the top that we hit in 1. If it cannot take out that top, that model doesn't hold any weight, so to speak. So as for right now, my sense is that we are still within the confines of this 1, 2, 3, 4, and 5. Of course, I'm not drawing it to scale nor to time, but just to have an idea, I do believe that we still are in this counter wave, wave 2. In terms of where pricing could take us, we're sitting roughly 1283, 1284. We've pointed out that we have different areas, but most importantly, we have to see where and when this market will find some support, because when we start to look at some of our longer term charts, that's just beginning to turn bearish. Let me show you what I mean by that. And what I've done is I have put up a 2-week chart. This is just our major count right here. And realize that a 2-week chart is going to lag behind a weekly, and a Japanese average is really going to lag when you have a 2-week Japanese average chart. But we've gotten the first really red that we have seen. And if this market were to continue downward, this is how it would start. But we do have a red candle forming, but this is a 2-week chart. So it's got another week before it really completes that particular candle. So my sense is right now, as of yet, we have not caused any long-term damage in the charts. 1. 2, we are in a holding pattern waiting to get some sort of confirmation that we have hit some sort of a bottom. 3, we're basing it upon Fibonacci retracement areas. We broke through the first. Now we're waiting to see if it holds that 70 area and the 65 area. Those are the next 2 points. And lastly, using a system of Japanese candlesticks and particular patterns that will highlight or give us some real strong information about a potential pivot point. And so what about silver? Well, as you know, silver has been reacting as its own man in that it has remained under pressure even when gold moved up. We have a pretty critical level of support. That level of support is got to be followed by, you can see these series of lows that are just below that, down to about, what, $19 per ounce. That's these bottoms right in here. I'm not going to look at that, but I'm going to look at these series of bottoms right here. And that has to be absolute support. If the market breaks through these points, the only thing that we can ascertain is that we are still absolutely in a defined bear trend in silver. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for another daily update and review. Bye-bye.